everybody. Welcome back to Finance Friday. It's another special edition of Money Girl. This is the show where I answer your burning money questions. I love hearing from you and answering anything that's finance related on your mind. So if you want to leave me a voicemail, you can do that by calling 302-364-0308. You can leave your name or stay anonymous. Or you can contact me by visiting lauradadams.com and using my contact page to send me an email. Today's topic comes from an email from Joe, who says, I've started doing some online shopping for the holidays. The cart often shows one or more buy now, pay later options with good terms, but I'm unsure whether it's better than using a credit card. Can you review what buy now, pay later is and when to use it instead of a credit card? Thank you for your question, Joe. This is a good one. You know, whether you're shopping for the holidays or restocking daily essentials, buy now, pay later, or BNPL options are available at, just about probably every online checkout these days. And this podcast will review how the buy now, pay later services work, their pros and cons, and whether they're a better option than a credit card during the holidays or any time of the year. What's interesting about buy now, pay later is that defining it can be a little challenging because there are different point of sale services with different business models, different terms and offers. Some companies offer a short-term loan that you can repay with or without interest based on the term you choose. And some buy now, pay later options specialize in professional services, like for patients at an ophthalmologist, veterinarian, or a dentist office. For instance, let's say you don't have dental insurance, but you need a pretty pricey procedure that you can't afford to pay in full. Well, the office may have one or more buy now, pay later options. You would complete a short application and you could be approved for the necessary work the same day. And you could get financing available for 6, maybe up to 24 months or even longer with interest. But other buy now, pay later companies, certainly the ones that appear in online checkout carts, they typically let you split a purchase into equal payments over a period. It could be over 4 or even up to 8 weeks. You do have to complete a short application with your personal and payment information. If you get approved, your first payment, such as 25% of the purchase price, would be due at checkout, and the remaining payments will be charged automatically to your chosen debit card or credit card in equal installments every 2 weeks with no interest or fees. So I think the most appealing feature of many of these buy now, pay later options is that you pay no interest or fees if you make on-time payments. The payments are fixed and scheduled and automatically deducted from your chosen account. As I mentioned, it could be a debit card that is linked to a checking account, or you could choose to link it to a credit card. Therefore, you know precisely when the debt will be eliminated, and that could help you manage cash flow. Having buy now, pay later payments charged automatically to a linked debit or credit card makes them really convenient. Plus, most services only do a soft credit check or none at all. That means buy now, pay later approval has a high acceptance rate, it happens quickly, and it doesn't negatively affect your credit scores. But of course, there are downsides of every financial product. And I think the big downside of a buy now, pay later offer is that missing a payment comes with very high fees. For instance, let's say you link the payment to a checking debit card and your account has insufficient funds. In that case, you're going to get charged a late fee by the buy now, pay later provider and an overdraft fee by your bank. Plus, many companies that split payments over several weeks don't report them to the major nationwide credit bureaus. So that means they're not going to help you build credit. However, I will say there are some buy now, pay later providers that do report to the credit bureaus. So I think this is improving. So you want to check into that if you're, actively trying to improve your credit scores, and make sure to choose a buy now, pay later service that will report those payments to your credit history. Another downside is that because the initial buy now, pay later payment is so low, it may cause you to overspend. Attractively low payments can encourage consumers to take on more debt than they can afford. So Joe's wondering, what's the difference between a buy now, pay later and using a credit card? Making purchases with a credit card certainly gives you the most flexibility for repayment. For instance, you could make minimum payments. You could repay your entire balance in full, which is, of course, what I recommend, or you could pay any amount in between. If you pay your full credit card statement balance by the due date, you pay no interest. So, that's really the best way to use cards. Plus, using a card typically lets you accumulate rewards like cash back or points that you can redeem for travel or products. They often include great perks like purchase protection, extended warranties, fraud protection, and travel insurance that you never get with a buy now, pay later offer. Managing credit cards wisely also allows you to build a strong credit history, boosting your credit scores. Of course, the downside of credit cards is that it's easy to accumulate high-interest debt when you carry a balance from month to month instead of paying it off in full. So depending on your interest rate, and it, could typically run between 12%, maybe up to 30% or higher, and how long it takes to pay off charges, you could pay double or triple the original purchase price. Remember that if you only make a card's minimum monthly payment, it could take decades to pay off a large balance and result in paying a significant amount of interest. So how do you compare buy now, pay later offers and credit cards? Well, whether you should use a buy now, pay later offer or a card depends on how you plan to use them. The interest you pay could be 0% for each option if you make payments on time or pay off your card balance by the card's due date. If you want to build your credit, a buy now, pay later offer could help. However, credit cards have a strong positive effect on your credit when used responsibly. As I mentioned, cards typically offer many purchase protections and rewards, while you receive none with buy now, pay later. If you're disciplined with credit cards and pay them off in full every month, they're the best choice. But let's say you struggle with card debt, or you want to budget a necessary or an emergency purchase over several months. In that case, a buy now, pay later offer can be a good alternative if you can afford the automatic payments. Always ask yourself if you genuinely need or want something before purchasing it. A good rule is to wait at least 24 hours before buying a high-priced item so you have time to consider it and avoid an impulse purchase. However, if you need to make an urgent purchase like dental work or a veterinary visit and you don't have a credit card, using a buy now, pay later offer is a convenient way to make a purchase that could significantly improve your quality of life. Joe, thank you so much again for sending in this excellent question. I hope the comparison helps you make the best financial choices when you're checking out this holiday season or see buy now, pay later options any time of year. That's all for now. I'll talk to you soon. Until then, here's to living a richer life. Money Girl is a quick and dirty tips podcast. We've got a great team that works on the show. I want to thank Steve Rickyberg, who is our audio engineer. Holly Hutchins is our director of podcast. Morgan Christensen is our advertising operations specialist. Rebecca Sebastian is our marketing and publicity manager. And Nathaniel Hoops is our marketing contractor.